All right, so we're thrilled to have two of our great Haute Lawyer partners with us today, Karen Lepekis and also Suzanne DeWitt. Thank you so much to each of you for being with us.
Happy to
So,
be.
before we begin, I want to ask each of you what your biggest takeaway has been from going through the pandemic. Karen, beginning with you.
I guess, is that it's possible to work from home. I never in a million years that I could be productive working from home with the nanny and the kids walking around behind me with the dog next to me. But in fact, it's been my most productive year, despite, the gloom, doom and gloom, and, the shadow of COVID. It has been actually a very good year. Suzanne?
How's it been? Back over to you. How's it been for your team as a whole?
Are you talking to me?
Yes.
It's been good, actually, because our family lives have improved. The stress of not having to run to in-person meetings and board meetings and unnecessary networking events, that's all been removed. So we've had more time at home, and I guess that's more work-life balance. I hate that term, but it's also given me more time to work. I don't have the commute of an hour and a half every day. I have more time to exercise in the morning. So it's been better in a lot of ways.
Thank you, Karen. Suzanne, how about you?
What Karen has said resonates with me as well. I think the number one item in my mind is the increase in productivity. And I think that's the nature of our practice, being transactional. I understand litigators have probably had more of a paradigm shift, having Zoom hearings and whatnot. But what Karen and I do is traditionally basically can be done anywhere. And if you actually factor in the reduction in unnecessary networking or meetings and everything, it really gives you a bump up. I likewise, with two young children, didn't think I would be able to work from home as smoothly and as quietly as I have. I've been coming back to the office slowly, but my office is rotating and we're still on, semi-open. So it's actually quite nice. And the clients are really understandable about, being amenable to not having in-person meetings and jumping on a plane for every, aspect. You can do more things at one time, I guess, is the takeaway.
And actually, I'll add, because I've been litigating a lot this past year in tax court in the Southern District Court of Florida, and it saved my clients a lot of money.
Yes.
They've done Zoom depositions from their home, mediations from their home, where otherwise there would have been a lot of travel time and expenses. Mm-hmm. We've had trials, them sitting in their bedrooms, me sitting at home, and in a way I thought it was better because it felt more intimate, and I felt like everyone got to know my client better that way.
Yeah, you're forced to look at the subject in front of you, and I think there's not a lot of group think that's able to happen. Everybody has to focus on the person, in front of them. I agree with that.
And also the raw data, like everything is very raw at that point.
Right.
Which I think can also be very helpful.
Yeah. Yeah. Yeah.
So, two great partners. Karen, I'd like to begin with you. If you could just briefly introduce yourself.
Yeah, I'm a tax lawyer that focuses on defense against the IRS and the Florida Department of Revenue. I represent clients worldwide, nationwide, anyone that has a dispute primarily with the IRS. I grew up in Michigan, but came down here to Miami about 12 years ago to get a job with the IRS. I litigated representing the IRS in tax court, bankruptcy court, and left there after 3-4 years to start my own practice. So since 2013, I've been representing individuals, businesses in tax court, district court, administrative proceedings against the IRS.
Thank you, Karen, and thanks so much for being with us today.
Thank you.
Suzanne, how about you?
Well, I don't do tax controversy work in court like Karen does, but we work hand in hand. I'm on the planning side and the transactional side of things where hopefully my clients don't end up in court. I mean, it always happens where, you want to have challenges against the IRS. But my practice is more like, business planning for clients. I've been doing this for 21 years. I was born and raised in Coral Gables, so I'm a native. I went to school here and I did my law degree, MBA, and LLM at University of Miami. I was at Baker and McKenzie for a while. Long story short, I've sort of transitioned out to being on my own since about 2009. I went on my own, but like Karen, we had our training, and then, in this area of law, that's pretty much what you do, your internships, and then you go on your own.
It's like we're both in tax law, but in the world of tax, there's so many different niches.
Yes.
Like I don't do planning. So
Yes.
for clients to someone like Suzanne for planning, another attorney, even for like international planning or international disputes.
Yes.
Let's sort of start there. Suzanne, why would someone need to hire a tax attorney?
I think a lot of times, and Karen, I don't know if this happens in your niche area, but with me, a lot of times, what I do is confused with accounting. And where what I do is tax planning. I, for example, have represent U.S. people with commercial operations both here and outside the United States, or asset holdings. And likewise, I represent non-U.S. persons who have inbound investments in the U.S. And that's the best way to structure those asset holdings. An accountant, and a tax planner do have some overlap, but it is a very complementary relationship where the accountant typically, calculates the tax due on the data he's given, whereas a tax planner basically goes into the raw data and describes and sort of helps formulate what type of income it is, because you have to give income a character. For example, is it ordinary, is it capital gains? And you want to take positions on that to maximize your client's bottom line. And so typically once my clients get to the accountant, it's really just sort of like handing them the work. They come back with questions and take it from there to the tax filing. So, I don't prepare tax returns or anything like that. I'm more of like the artist that designs things, I guess.
And structures it.
Yeah.
Correctly. Thank you, Suzanne. Karen, on your side of the business, why would someone be in need of hiring you?
A lot of people come to me because they've had problems with an accountant, or their accountant's the return that was prepared by the accountant is being audited. There's significant collection activities. There's a lot at risk, or potentially there's a criminal investigation that's looming in the future, and they want to make sure that communications are subject to attorney-client privilege, which they are not always with one's accountant. So I work hand in hand with accountants. People come to me if they haven't filed returns for years. I provide them advice, they retain me, and then in turn I retain the accountant to prepare the returns, do the bookkeeping. So there's, I guess, a gray fuzzy area between the work that an accountant and an attorney does, but a lot of people need both.
So I'm sorry, Suzanne.
Sorry, I just, to Karen's point, to give you an example, I've had clients come to me, foreigners that didn't even realize they had a tax filing in the US. And there's something called Voluntary Compliance that was a program. I would call Karen in times like that to help us initiate and have the client become compliant and true up their items. So it's interesting how, maybe I'm viewed as coming before Karen, but a lot of times her and I would definitely work together in getting a client sort of organized in order to do planning.
And can you go a little more in depth? Why would someone need both? Why does someone need both an accountant and then someone on the tax side of the law?
I don't know.
Suzanne,
There's
starting with you.
been essays written about this, so this could be a topic in itself. But again, an accountant is educated in accounting, whereas a lawyer is, especially a tax lawyer, specialized in the tax laws that go behind the preparation of the return. Why are certain things on the return? Why should certain things be reported as they are on a return? And then also, an attorney is educated in how to represent somebody before the IRS, before the court, and an accountant doesn't have the authority or education to do that. Just as I don't have the education to provide you to prepare the books for a company. While I understand them, I'm not the person to do it. It's not most efficient to hire an attorney to do that type of work. So I think accountants often make a mistake because they like to continue to represent their clients. Something happens with the return, they want to represent them before the IRS. They think this is easy, we're going to fix this quickly, but they're not trained to see, okay, what is something I can say, could that potentially hurt the client down the road? Because it's my opinion that everything you say is going to be used against you. So you have to be very calculated in what you say and be very careful. You don't just try to solve one problem without seeing how that might cause other problems down the line. So that's my short answer.
Well said, Karen. Suzanne, is there anything you would add on that?
Yeah, actually, there's a good example would probably be myself. What Karen does is a very niche practice and very specialized. It's a very high level of practice in the tax controversy realm. And I personally wouldn't, endeavor to go before the tax court because I'm not on that side of the niche. And I do think she raised an interesting point about the overreaching of accountants at times where they want to see it through. They feel like they've made maybe an error, be it material, be it, whatever. And they try to defend their clients because it seems like an innocuous request and it's easy, and nothing's ever easy. I think the devil's in the details, and things that seem easy are probably like the most volatile cases. I do think that it's great to keep everybody involved as a team and then appoint somebody who's a specialist to go before the IRS if needed, such as Karen.
Thank you, Suzanne, for a little more clarity on that. How has, Karen, staying with you, how has COVID caused some changes in the tax laws? Such as receiving, the different stimulus checks that have gone out. What changes have you seen in the industry?
Well, primarily, the additional, economic impact payments. And it's interesting, it's not necessarily a tax law, but the IRS has been tasked with, delivering the funds. And, they've been the agency, tasked with that responsibility. So it doesn't necessarily have to do anything with tax laws per se, except that the amount of the payment is based on one's income and the number of children they've reported, their income they've reported over the past couple of years, etc. Certainly, we're probably all aware of extended deadlines to file returns, which started last year, and again for 2020, individual returns don't have to be filed until May 17th rather than April 15th. But I'm telling everybody to pretend that extension doesn't exist, to pretend that April 15th is still the deadline, because we know that anybody that waits till April 15th is now going to wait until May 15th.
Yeah, and to Karen's point, the IRS hasn't even commented for certain on that. Treasury has, released commentary, and I've been telling my clients the same thing, Karen. What's interesting is that clients think that, you get till May to file and pay if you're paying in full, but 99% of my clients are on extension and make quarterly estimated payments. And so whilst they have till May to file, they have to make a quarterly payment in April. So that's a little conundrum to, what do you do? But there's been no extension for quarterly payments.
Right, that is a common mistake, that you have you file an extension, that you also have an extension to pay. And that's never been the case, and it isn't. Actually, for this year it is, except for the estimated taxes. Other taxes can be paid for individuals May 17th.
What are some common problems that you see people having with the IRS that are the most common of nature? Suzanne, beginning with you.
One of them, I think the most typical examples would be probably a client who, gives you facts that they think you need to know rather than the whole story. And whereas their accountant may know a set of facts, you may know a set of facts, and they tell you they're not completely open, the good, the bad. So, there's techniques, I know Karen has probably experienced this, that you have to just, get the whole intake and make sure that you have all the facts before you go down a road with a client, because at the end, one particular fact could change everything. Let me give you an example. I had a client once that transferred money to a child as a gift, which is usually US tax free if it comes from a foreigner in a foreign account to a US person. Well, this foreigner transferred money into the United States, which is typically tax-free, except that a lot of times, if it's done from a US account or a corresponding account of the foreigner, there's a little gray area on the taxability. And especially under an estate tax situation, you get tripped up and have a tax. Like, it's little nuances, at least in my world, like that, which make a lot of the difference.
Yes, it's similar. I think a lot of the problems that end up on, in my office were caused because the client was not transparent with an accountant or decided what the accountant needed to know. And they didn't even in good faith know what information they needed to share with the accountant, about gifts, accounts that foreign accounts that their names might have been added to, even if they thought they had no right to the money. An accountant really has to know everything financial going on in your life. If you, become part owner of a company, it doesn't matter if the company hasn't made money, if it's losing money, they need to know so they can decide what needs to be reported.
Touching a little bit on the case that you just spoke about, Suzanne, how are the tax laws different when it comes to international laws or cross-border wealth planning? What are the most common problems and misunderstandings that you see there?
I think, sort of building on the transparency idea, the United States, it taxes on a global basis. Whereas a majority of the foreign jurisdictions tax on a territorial, meaning only your assets, income, etc., in that foreign country are subject to tax, whereas that government doesn't care about what you have outside the country. The US, on the other hand, has a global tax system. Even if you don't have assets in the country, you're taxed on your holdings all over the world. Obviously, there's planning to get around, navigate the rules and obviously to be compliant. But a big misconception of my clients is the transparency. They believe that, US is on a territorial system, so they'll only tell me their US assets and fail to mention that, for example, in the United Kingdom, they had a pied-à-terre, or they have, assets of any sort, or thinking of buying property, or bank accounts even. Oh, that bank, I haven't touched that in years. And, that's really problematic from a US perspective. So, and then when you try to explain the global tax system, obviously, sometimes there's it takes some learning of your clients and managing their expectations to make sure that, you can help them fully by making sure they actually understand the rules, the systems, and the difference between the two rules of US and non-US.
Thank you, Suzanne. Karen, is there anything you'd like to add to that?
Speaking about international clients, a common problem that I come across is, especially in Miami, you've got people that have several homes around the world. Well, they ship a lot of things in to the United States, cars, artwork, personal belongings, to furnish their condos here. Well, every time they ship something to the US, they fill out import records. Well, the Florida Department of Revenue gets those, and they're looking to see if you paid use tax on those. And it's not even something that it occurs to anybody. They think I bought this, in Europe, I paid sales tax there,
VAT, everything, yeah.
and I come here and I have to report to the Florida Department of Revenue. They're usually easily resolved, but we have to now prove to the Department of Revenue that tax has already been paid on them. Otherwise, they have to pay use tax, which is the equivalent of sales tax on the value of all those items that are imported.
Yeah.
What changes do each of you see ahead in regards to tax code and tax laws? Suzanne, the most pressing change that could potentially be on the horizon?
Right now, what's on my top of my radar in the planning realm is probably the notion of carried interest with investment funds. Carried interest for those that may be watching and aren't aware is that when you have a private equity fund that you've invested in, you're one of 500 people, or you help manage, you get carried interest, which is a portion of the increase in value of the assets. And typically, because of legislative grace, the IRS has said, well, we're going to let you tax that at 20% as capital gains because of the capital nature of this endeavor. And there's a lot of musterings now about actually raising that to equalize it more with ordinary income rates, which can be up to 37%. So really, in my view, it becomes quite interesting with all my private equity managers as clients that, where's the incentive now to increase the value of the underlying asset? That's the whole construct of what they do. So it remains to be seen, but I think that's, to me, the biggest fundamental change that I've been seeing, probably the most impact.
Thanks, Suzanne. Karen, how about you?
And I don't know if we've seen it yet, but I expect we will see it. And it's in the same vein of what Suzanne was talking about, but with the amount of spending that we've seen over the past few years, tax rates have to go up.
Yep.
That or enforcement is going to go up. Personally, I hope enforcement goes up so that tax rates don't, because I believe that if everybody paid what they were supposed to pay, tax rates wouldn't need to go up. And really, it's the honest taxpayers that are going to be paying more tax when the rates go up. We've known for years that the budget of the IRS is, woefully low, and it needs to be increased. And I believe that if more people are working at the IRS, in fact, you get more customer service and you can more quickly get to the right answer. Unfortunately, a lot of my clients have been waiting for years in litigation and administrative proceedings, trying to get the IRS to get to the right answer, because I believe in time that it does. If there's more funding for the IRS, we can get to that answer quicker. But we'll probably see both increased enforcement, through collections and audits, and higher tax rates, unfortunately.
I think, just quickly to Karen's point, when, the IRS typically, when they want to, increase their incoming revenue, one of the low hanging fruits is the estate tax exemption, which currently is at around a little over $11 million, which is, in my view, I think one of the highest it's been. Now, I know that in short form is going to be coming down. That's an instant increase in revenue for the IRS. So that's definitely one of the low hanging fruits as well.
What's the law that's currently in place that you find to be the most problematic? Karen, beginning with you.
What's bothered me lately, I've had a few clients with this, the penalty that's related to a Form 3520 for failing to report their interest in a foreign trust. And the due date may be March 15th, where their individual return is due April 15th. And by failing to file, they can easily have a $100,000 penalty. And for that mere failure, even if they paid all their tax, it's just the mere reporting of that interest. And that bothers me. And their only defense is reasonable cause for the late filing, which is not easy to establish.
Thanks, Karen. Suzanne?
Definitely, I think the Form 3520s is especially problematic, as Karen said, especially because you have to mail them to a different IRS office. So sometimes the left doesn't get it and the other one doesn't get your return, and there's a miscommunication. I mean, that all comes down to IRS staffing. Another area that I am not too pleased with is just the increased compliance element of tax filings. I mean, when back in the day, you used to just file a tax return. Now you have like all these annexes of compliance filings. You have to report foreign bank accounts, and the penalties there are very high. A lot of people who are US persons that are, executives in a company and happen to have signatory over an account or a corresponding account in London don't realize that personally they have to report that account, the balance in the account number. So it becomes very, you don't know what you don't know. And so if they don't have a educated, cross-border international CFO speaking to them and, letting them know, you don't know what compliance items you're supposed to do. Now tax returns I'm seeing are, 50 to 100 pages, whereas tax returns used to be 20 pages. So that's a big area that I think, could be more efficient and streamlined. And unfortunately, it hasn't been this, the case yet.
Moving into a current tax year. So looking ahead to next year and filing, what's too late in the game to bring in a tax attorney? When do you ideally want to begin?
Well, from my side, a lot of times there has been, purchases of assets already done and time has passed. For example, you have a whole year that's passed since you've purchased an asset, and you realize that they shouldn't be holding it in their individual name. Well, at that point, a transfer has value, from a US perspective. And so it becomes a slow moving shift. A lot of the sweet spot of planning for foreigners, for example, is we call pre-immigration planning. It's before they become US persons. And there's a lot of nifty things you can do and are allowed to do to make their US tax burden very efficient once they're here. But if you have somebody coming here that, for example, came and just then came to a tax attorney for advice after the fact, it becomes really challenging to move around assets in an efficient manner that are already on the US tax radar, because then you have, deemed sales of stuff that you already own. It becomes very problematic. So I think once you've at least a year has passed since assets have been purchased or businesses have been undertaken, structuring the ownership becomes very, very hard. That's not to say it's not doable, but it is challenging.
Yes, I think the answer is it's never too early. I love when potential clients reach out to me. We have a consult and I say, you know what? You don't need to hire me right now. But if X, Y, or Z happens, reach out to me then. They have peace of mind knowing that they're fine for now. And then we don't have such a big mess to clean up later. Or especially one of the wisest clients I had reached out to me after he donated a large piece of property to a charitable organization. And it was a huge money saver for him because he was prepared to file his return, showing the charitable donation. But I, went through the law with him and explained, look, you need to do 1, 2, 3. You need to get a qualified appraisal. If you don't have that qualified appraisal, this multi-million-dollar donation is not going to be considered, and you can't get it later. So, by meeting me before he filed his return, potentially saved him a lot of money.
In the right here and now filing on 2020, what are the most common issues that you're seeing and dealing with, Suzanne?
I think a hot topic, if you will, are I'll start broad, but it's basically foreigners are only allowed a certain number of days to be in the US before being considered US tax residents. I think a common misconception is that immigration follows the same rules as tax, where you can become a taxpayer and not be here legally as an immigrant. It's quite odd. And so, especially in COVID, there's a lot of people, especially older people, that have overstayed the requisite amount of days that you're allowed to stay and are now been in the US. For example, on average, you want to stay here 121 days per year. I like to say 120 just to keep it, safe. And they've been here longer in this particular year. And they were here last year as of March, and they became ill and had to stay. So the IRS has come out with some relief for that, but I think it hasn't been current enough to address every situation. But that is a huge problem because you have older people with worldwide holdings, as I had mentioned, that global tax system now, and they didn't realize they're US tax residents just by being here, being in the hospital, being in, coming here for treatment or whatnot.
Thanks, Suzanne. Karen.
Most of my work involves cleaning up problems from the past. Like I lived several years in the past. But one of the biggest problems right now really is with the IRS itself. They have millions and millions of returns that have not been processed. So I have clients that could not e-file, late filed returns, and there are years of tax returns that have been sitting there for months. And we can't go forward, to resolve collections until those get processed. The IRS believes they still haven't filed the returns, but yet they're sitting in trucks or, storage units at the IRS facilities. So that's one of the biggest problems. And I think we're going to have that for, months going forward.
And I think when Karen says trucks, that we're not exaggerating. There are literally trucks parked in front of the facility with mail overflowing that has not even been read, or forms that have not been addressed. I don't know, Karen, if your experience is, but the lag time on just a typical, check the box election, getting a confirmation back, for me is months, where it used to be just a couple weeks. I mean, months, at least, 6 months.
Yeah, I've heard that. I have one client that filed a return 6 months ago. And while the IRS has just indicated that it did receive it, it still hasn't processed it. So there's some light there that at least we know that IRS received it. Some people going into the voluntary disclosure program recently, they said it's now taking like about 6 months to get clearance to enter the program, where before we'd get it in a couple of weeks. So everything is taking a long time.
We touched on it. It's never too soon to start working with either of you. But again, what would the too late mark be? I mean, is there a too late mark? Can someone come to you in the final hour with a Hail Mary and you can have major issues? Suzanne, beginning with you.
I'm trying to think of an example where it would literally be too late. I mean, I typically, it may, in my view, but this might go into Karen's area, it may be too late where the IRS has issued a notice and there's a substantial underpayment penalty at risk and whatnot. I wouldn't recommend doing tax planning during heart surgery like that. You'd want to clear up. So it's not like it's too late, but it would be not a good time and too late to come to me to sort of prevent that. We would have to wait until hopefully a successful outcome after. So things like that, when there's controversy already, I don't like to start planning in the middle of heart surgery.
Thanks.
In my case, I deal with people who, they have liabilities they can't pay or liabilities that they don't agree that they owe. And it's too late to dispute a liability after, say, it's been paid and 3 years, 2 years have been passed, or the later 2 years after the tax has been paid, or 3 years after the return was due. So just because it's too late to get a refund, that's by law. But otherwise, as long as the tax is owed and hasn't fallen off the books, meaning that IRS still has the legal ability to collect it, it's not too late to do something.
Thank you, Karen. What's the one piece of advice that you would want everyone to have as a takeaway from today, starting with you, Suzanne?
I think it would be probably like full transparency as a client with their advisors. I would, recommend the biggest takeaway is the best planning, in my view, is one that starts with the whole picture. And so like we have spoken about, like the accountant and tax planning overlap, I feel that having an accountant, a tax planner, and somebody like Karen even, if you're dealing with millions of dollars at the outset, to have a strategy meeting and decide what are the hot spots that need taken care of, would be probably the most efficient thing to do. It wouldn't be inefficient to pack a room like that. That's probably my biggest takeaway, because it's sometimes a taxpayer who thinks they know what facts are important and which aren't, and rather than just giving everything and letting us decide those types of things.
Thank you, Suzanne.
And
Karen?
And not just a takeaway from today, but just overall, when it comes to the IRS, when it comes to taxes, if you're losing sleep about it, pick up the phone, get your head out of the sand and call somebody. Time is not your friend to wait. These problems don't resolve themselves. And the sooner you address it, the better the results will likely be.
Agreed.
That's it.
Thank you. Thank you, Karen. Suzanne, if we have, brain followers that want to work together with you, what's the best way to get in touch with you?
I have a website with my contact number. It's www.dewittplc.com. I have my phone number is listed on the website. You can get in touch with me that way, or my phone number is 305-573-6000. I'm on Brickell, 600 Brickell Avenue, but that's probably the easiest way.
Great. Thank you. Karen?
Yeah, Google, or I have a website where someone can schedule a consult, talktoataxlawyer.com. But otherwise, I'm everywhere. Facebook, LinkedIn.
Easy to get in touch with.
Yeah.
And a final question. What's going on right now in South Florida, and really the influx of, it seems like everyone is down here, everyone's relocating here. That's really what it feels like right now. So I think those of us that live and work here, what are you seeing in regards to your respective businesses? Beginning with you, Karen.
With respect to the influx, it usually comes a few years after they move here, when they realize that, they had U.S. tax filing obligations from from even before, as Suzanne said, even before
Right.
they became, citizens, or just the fact that they've been here a certain number of days in 1 year can make them a U.S. tax person with the same obligations and reporting obligations that the rest of us have.
Thank you. Suzanne?
I've seen a lot of influx into Florida because of the lack of state tax, that a lot of people from New York, for example, are coming down here. To me, that's a lot of right now my client base in terms of the inbound in Florida. I think a common problem that's found in these cases are when, you have assets in various states, and you think because you come to Florida, nothing's subject to tax, but yet where we have the federal system, each state has a tax system. And each state has rules for assets located within that state, be it sales tax or their substitute use tax. So they think, oh, well, I left something in Pennsylvania, or New York, but I'm here now and I shouldn't be paying tax because I'm a Florida resident. And that's not always the case. You have a big, the state tax radar always needs to be on. And ideally before you come and become a Florida resident.
Thank you, Suzanne.
Yeah.
Well, I want to thank both of you for your time today and sharing your expertise and, a lot of good information that you shared with us. Thank you so much. Thank you for your partnership.
Thank you.
And, on behalf of Haute Living and the Haute Lawyer Network, wishing you both to stay healthy and safe, and to your families and to your team.
Likewise, likewise.
April. Thanks, Suzanne.
Thank you.
Thank you.
Bye.
Bye-bye.